Now speaking, Eve Tang, Capital Markets. NIO reported their first quarter 2023 earnings on today's conference call. Founder, Chairman of the Board and CEO, Mr. William Li, CFO Stephen Feng, Senior VP of Finance Stanley Chu, and VP of Capital Markets Jade Wei were all present. The discussion included forward-looking statements made under U.S. Private Securities Litigation Reform Act of 1995, which involve inherent risks and uncertainties. NIO also discussed unaudited GAAP financial information as well as unaudited non-GAAP financial measures. Mr. William Li then began his presentation. Now speaking, William Li, Founder, Chairman, and Chief Executive Officer. NIO delivered a total of 31,041 smart electric vehicles in the first quarter of 2023, up 20.5% year-over-year. The company expects deliveries in the second quarter to be between 23,000 to 25,000 units. NIO launched the all-new ES6, an all-around midsize smart electric SUV, on May 24 and began delivery the next day. In May, NIO also started user delivery of the 2023 new ET7 and the flagship coupe SUV EC7. On April 24, NIO's ET5 was rated good, the highest safety level by China Insurance Automobile Safety Index or chassis. J.D. Power's 2023 China New Energy Vehicle Initial Quality Study released on June 1, NIO's ES6 won first place in the premium BEV segment for the fourth consecutive year. Also, in J.D. Power's 2023 NEV IQ study which evaluates new energy vehicles' performance, execution, and layout, NIO ET7 ranked number 1 among premium BEVs. The company plans to launch the NIO ET5 Touring on June 15 and start delivery in the same month. NIO's flagship SUV, the all-new ES8, will commence delivery in the near term. Additionally, the new EC6, the company's second-generation mid-size smart coupe SUV, will be launched and delivered in the third quarter. Banyan, NIO's smart system, will be upgraded to version 2.0 in June. This release includes over 120 new features and enhancements and provides a new feature that is automatic planning of charging and swapping routes. NA Plus Beta, NIO's intelligent driving technology, has been released to all NT 2.0 users and will be using new proprietary BEV model and occupancy network for perception in a large language model trained with a large-scale data set for planning and control. NIO has installed 1,474 power swap stations worldwide, including 119 third-generation power swap stations, and has completed over 23 million swaps. The company has installed 7,000 power chargers and 8,800 destination chargers, and its power map has been connected to over 1.1 million third-party chargers globally. The fourth NIO user console was established after a member election and the company plans to set a science-based target within the next 2 years with the goal of contributing to global sustainable development. In the second half of 2023, NIO intends to have its entire NT 2.0 product lineup enter the premium battery electric vehicle market and 1,000 Nicaraguan Cordobas power stations put into operation. Now speaking, Stephen Feng, Chief Financial Officer. In the first quarter of 2023, NIO reported total revenues of 10.7 billion Chinese yuan, an increase of 7.7% year-over-year and a decrease of 33.5% quarter-over-quarter. Vehicle sales were 9.2 billion Chinese yuan, a decrease of 0.2% year-over-year and 37.5% quarter-over-quarter. This was attributed to lower average selling prices and a decrease in delivery volume due to higher proportions of 85 and 75 kWh standard range battery pack deliveries. Other sales increased 117.8% year-over-year and 11.3% quarter-over-quarter, primarily due to increased sales of accessories, repair and maintenance services, auto financing services, used cars, and power solutions resulting from continued growth of users. Gross margin decreased to 1.5% in the first quarter of 2023 compared with 14.6% in the first quarter of 2022 and 3.9% in the fourth quarter of 2022. This was mainly due to a decrease in vehicle margins, which went from 18.1% in the first quarter of 2022 to 5.1% in the first quarter of 2023. The decrease was attributed to changes in product mix and increased battery cost per unit. Research and development expenses increased 74.6% year-over-year and 22.7% quarter-over-quarter, primarily due to increased personnel costs and research and development functions and increased share-based compensation expenses. SG&A expenses increased 21.4% year-over-year and 13.7% quarter-over-quarter, due to increased personnel costs related to sales and general corporate functions and increased expenses related to sales and service work expansion. Loss from operations was 5.1 billion Chinese yuan, up 133.6% year-over-year and 24.1% quarter-over-quarter. Net loss was 4.7 billion Chinese yuan, up 165.9% year-over-year and 18.1% quarter-over-quarter. NIO's balance of cash and cash equivalents, restricted cash, short-term investments, and long-term deposits was 37.8 billion Chinese yuan as of March 31, 2023. Morgan Stanley analyst Tim Xiao inquired, what cost-cutting strategies is NIO considering in light of the challenging industry and macro outlook, and will this impact launch plans for output products next year? William Li replied, thank you, Tim. Great question. The market competition is intensifying and there are changes in the market dynamics. We are launching 8 products based on the NT 2.0 platform, with a focus on having a targeted sales strategy and marketing approach for each product to reach its intended user group. Our challenge is to dedicate resources to sales and marketing efforts for each product, especially for key products, and be agile in response to the changing market. Regarding R&D projects, we need to invest in building our long-term competitiveness while adjusting the pace of investment given our resources and company priorities. As for outputs products, we plan to launch them in the second half of 2024, but we'll aim for a faster go-to-market process to improve efficiency and better plan our resources. Morgan Stanley analyst Tim Xiao inquired, what are the order intake and delivery of the new ES6 since it has been launched, and when can we expect to see 20,000 units a month from the ET5, ES6, and ET5 Touring? William Li replied, thank you, Tim. ES6 has been well received by its users and praised in the media. We believe its performance has exceeded expectations and the test drive conversion rate for the ES6 reached a record high for NIO. We remain confident in the sales potential of the ES6 and aim to produce and deliver 10,000 units in July. To achieve this, our supply chain, manufacturing and other teams are making all the necessary preparations. As for the ET5 Touring and ES6 overall volume, we still believe 20,000 units can be achieved in 1 month. The challenge is the ET5 pricing. Last year, there was 12,000 Chinese yuan subsidy for users, but now they need to pay for home chargers. This makes the purchase of an ET5 around 20,000 Chinese yuan more expensive. Our focus is to find ways to expand user needs and demands. To combat this, we will launch the ET5 Touring on June 15, which will help improve product competitiveness and cater to the needs of individuals and families. Credit Suisse analyst Bin Wang inquired, what is the gross margin expectation for the third quarter and second half given the peaking of ES6? Stanley Chu replied, hi Bin, this is Stanley. As William mentioned, we saw higher prices for the NT2 product in Q2 and Q3, but we anticipate the average selling price and gross profit margin per car will recover. We are confident that our gross profit margin will reach double digits in Q3 and over 15% in Q4. Thank you. Credit Suisse analyst Bin Wang inquired, can you provide insight on any potential fundraising activities, particularly related to the NIO China IPO? William Li replied, thank you for your question, Bin. We have seen a decrease in operating cash flow in Q1 and Q2 due to delivery performance being less than what we saw in Q4 of last year. However, with the volume ramp-up in Q3, we expect this to improve. Our cash is sufficient to support our business development. We are managing our cash positions prudently and have adjusted our spending by delaying CapEx investment in R&D projects. We are focusing on markets we have already entered into instead of expanding globally. Any plans to access capital markets will be communicated to everyone. Bank of America Merrill Lynch analyst Ming Li inquired, what is the impact of battery price decline on gross margin in Q1, and what trends can we expect for the following quarters? Thank you. Stanley Chu replied, Ming, the price of lithium carbonate dropped a bit in Q1, leading to a rise in our gross profit margin. We estimate that it's around 2,500 per car. However, the lithium carbonate price has recently recovered to 310,000 per ton, which brings uncertainty to our gross profit margin. Bank of America Merrill Lynch analyst Ming Li inquired, what is your new CapEx and operating expense guidance for the year? Stanley Chu replied, Ming, our CapEx is focused on the construction of power swap stations, charging networks, cell service networks, and tooling and production facilities for new models. We are controlling the rate of these investments, but we cannot give a definitive guidance of CapEx investment for this year. We will adjust spending as needed based on our current status. Stanley Chu replied, regarding operating expenses, R&D will average 3 to 3.5 billion per quarter in 2023. There will also be a decrease in SG&A expense in Q1 due to reduced marketing activities and seasonality impacts such as the Chinese New Year holiday. We plan to increase the total amount of SG&A expenses in Q2, but aim for improved efficiency from Q3 when new models are launched and more volume is realized. HSBC analyst Yuqian Ding inquired, could you please provide an update on plans for a budget version of the ET5 model, and how the dial-down of OPEX might affect your break-even point this year? William Li replied, thank you, Yuqian, for your question. Regarding the ET5, we believe it should come with the important configurations, such as dual motors, AD suites, and other functions and features, as a standard. We believe this serves the long-term interests of our users. We also provide flexibility in other areas, like free battery swapping. These adjustments are made with the user's interests at the forefront. As far as the break-even point, we anticipate delaying it to within 1 year, which we consider reasonable. Thank you, Yukian. JP Morgan Chase & Company analyst Nick Lai inquired, what is the expected CapEx/cash burn for 2024 and 2025 relative to 2023? William Lee replied, thank you for your question, Nick. Regarding the dynamic and fluid market situation, we understand the importance of controlling risk and maintaining stable business operations. For the Outputs brand, the project is progressing as planned. Production capacity is sufficient to support both NIO and Outputs brands with no need for large capital investments. This year, there will be adequate power swap stations available to both brands. Investments in go-to-market activities for Outputs will be controlled to ensure faster cadence and agile operations, which can help conserve resources and capital. As a publicly listed company, cash management must be prudent with financing channels available from R&D and US dollar capital markets. Overall, while cash is not a major issue, refined management of cash and working capital is still necessary. JP Morgan Chase & Company analyst Nick Lai inquired, what is the expected contribution from the new product, and how do you anticipate the product mix changing going forward? Stanley Chu replied, thanks, Nick. ET5, ET5 Touring, and EC6 account for approximately 80% of our long-term volume. This year, with the launch of the NT2 product line, we anticipate that our gross profit margin will recover to 15%. Our goal for these products is a 20% gross profit margin in the long run due to cost advantages from our in-house technology capabilities and innovative supply chain development. UBS analyst Paul Gong inquired, what strategies have been implemented to ensure that ES6's sales do not follow the same trend as other recent new models? William Lee replied, thank you, Paul, for your question. Last quarter we launched 3 products, ET7, ES7 and ET5. We have seen lagging performance compared to our expectations. This is mainly due to market competition and internal cannibalization from these products. To address this, we are making adjustments in terms of sales channels, network and marketing strategy. Meanwhile, the 5 new products we launched this year on a new technology platform, NT2, are performing better than expected. We are also confident in the performance of the ET7, which has just been released. UBS analyst Paul Gong inquired, can you provide us with an outlook on the margin performance between high-end NIO brands and lower-end Outputs? Thank you. William Lee replied, thank you for your question. Regarding brand positioning, the current landscape is chaotic and users largely base purchase decisions on price. Our products and services offer superior technology and experience, but this value isn't always reflected in the price. We believe in the long run, our product value will be recognized by users in the market. Challenges exist in our microenvironment, like the lithium carbonate cost, which has impacted vehicle gross margin. We initially achieved 20%, however, if the cost returns to a reasonable level, we still have a chance to reach that figure. In the long term, economies of scale, efficiency improvement, and vertical integration of core components and in-house R&D capabilities can help us achieve 20%. For Outputs, our strategy is different as it's more about finding the best solution in the specific segment than aiming to hit a particular brand target. We see other companies selling similarly priced products achieving over 20% vehicle gross margin, and we are confident that with the right approach, the same can be achieved for NIO. SICK analyst Shui Deng inquired, what data have been collected on NOT Plus user usage over the past several months? What feedback have you received? What are your plans for subscription charges? How will the highway navigation to swapping stations improve customer experience? Are there any plans to add city function in the second half of this year? William Lee replied, thank you for your question. We have over 50,000 users using our NOT Plus service with an accumulated mileage of 41 million kilometers per week. We are currently conducting tests in city scenarios and use cases and will accelerate this process this year. Based on our internal evaluation, we are confident in the performance of NOT Plus in urban scenarios. We are also testing NAD, and if regulations allow, we will release it to our users. Our R&D for NOT Plus and NAD is on track and according to schedule. SICK analyst Shui Deng inquired, what impact has the expansion of battery swapping stations had on sales of new models, particularly in lower-tier cities? Stephen Feng replied, in response to the question, I can confirm that our power swap station network has had a very positive effect on our sales growth. We have already deployed 1,500 stations across China, and we expect that number to grow to around 2,400 by the end of this year. Each station offers 40 to 50 power swaps per day on average, indicating an efficient utilization rate. As the charging experience improves in cities like the Yangtze Delta and Tier 1, we have seen corresponding increases in sales volume. This gives us confidence to penetrate into lower-tier cities with more power swap stations, which should lead to stronger NIO sales and greater convenience for EV users. Mizuho Securities analyst Vijay Rakesh inquired, what is your expectation for production run rates in the second half of the year to reach an average of 20,000 per month? William Lee replied, thank you, Vijay, for your question. Our goal for the second quarter is to produce above 20,000 units monthly, and we're confident in our ability to reach this target. Mizuho Securities analyst Vijay Rakesh inquired, what challenges does NIO face when looking to expand subsidies into Tier 2 cities, given the lack of swap stations in these areas? William Lee replied, this quarter, our target is to deploy 1,000 additional power swap stations. Most of these will be placed on highways, while some will be in Tier 3 and 4 cities. We accelerated deployment in May and anticipate deploying 100 Power Swap Station 3.0s in June. We expect to continue increasing the number of installations going forward. Eve Tang replied, thank you for joining us today. If you have further questions, please contact NIO's Investor Relations team via the information provided on our website. This concludes the conference call. You may now disconnect your line.